Hi, Sean here from Mel's YouTube Bookside YouTube channel. Welcome to lesson 8. Okay, the last lesson in our series. In this lesson, you just got to remember, like I always say, make sure that you follow all the other lessons and you go and watch those lessons before you get to lesson 8. Okay, so if you don't know anything about that, you can't start in lesson 8. You're not going to know what's going on. Accountancy is very intricate. So, if you miss a lesson, you're not going to follow the next lesson. It all follows within each other. Okay, so in lesson 7, we basically did the bank statement and cash book plus petty cash book. We did the APSA cash book, then we did the suppliers control account, and then we did the customers control accounts. So please go watch those lessons, this lesson, it's lesson 7, because it's very important to give you a refresher of what we're going to do in lesson 8. So let's start with lesson 8. Okay, so we're gonna do the trial balance. That's what we're gonna end off. All this in lesson 8 is heading towards the last amounts and books and figures that we're gonna bring in for the trial balance for the month of April. All right, so let's start with the asset depreciation control account. That's the first account we're gonna do. Assets are depreciated yearly at 20%. This is for the month of April. So the assets, the furniture, $34.78 on the debit side. Depreciation on that item of 20% per annum divided by 12 months is 58 cents. Goes on the credit side of the assets and depreciation control account. Cash register is an asset. Cost excluding VAT, all excluding VAT, as you see it's written here. On the debit side, okay, $43.48, and depreciation on that at 72 cents. Right, so the total assets at cost price is $78.26. Total depreciation for 1 month, for this month of April, is $1.30. The total depreciation for 1 year is $78.26 times 20%, which equals $15.65, divided by 12 months, which comes out at $1.30 per month. So your total assets, $78.26, minus the March carried forward depreciation. Remember, we had March's carried forward one of $1.30. Then April's $1.30 gives us a net total of $75.66 for the 2 months of March and April. The total assets of $78.26 you put to the trial balance on the debit side, and the total depreciation of $2.60 you put to the trial balance on the credit side. April, do a journal entry for $1.30 to put to income and expenses running costs on the debit side. Okay, so the VAT control account. All right. The March VAT carried forward is $13.78 on the credit side. That's March's VAT carried forward. Suppliers $108.75 on the debit side. Customers $312.75 on the credit side. Cash book $31.50 on the debit side. And then the journal entries for those missed posts. We debit Vodacom VAT $3 put on the debit side, and we credit the petrol $6 on the credit side. So this one for the Vodacom is on the debit side of $3, and the petrol is on the credit side, $6. Petty cash on the credit side, $3. So we add up all those totals, and we get to $143.25 on the debit side. It's $143.25 in dollars. $335.53 on the credit side. We take away the debit side from the credit side. It gives us a sales tax net VAT on the credit side of $192.28. This is VAT that is due by the owner. So if it's on the credit side, it is due. The owner owes this VAT. If it's on the debit side, there's no VAT owed. Okay, so when VAT, this is very important, so I'm just going to read these through to you. When VAT is displayed on the debit side, the VAT is not paid to the receiver of revenue because the owner has paid up front for more purchases expenses than what he sold, and the debit balance is carried forward to the next month when VAT is due. VAT is only paid to the receiver when it's on the credit side. So that's basically what I told you. You understand? It's just nice fancy words. every 2 months from the month when the business opened, credit the VAT $192.28. Okay. VAT is charged to the VAT charged to the owner is import tax is always on the debit side. Income VAT charged to the customer, that's output tax, is always on the credit side. When paying suppliers or receiving payments from customers, you do not enter the VAT in the cash book. It's very important to remember that. It has already been entered in the suppliers or the customer's control accounts. VAT is only entered in the cash book for running expenses. For example, electricity, stationery, telephone, rent, all those sort of things, those running expenses. Please note, NB number 3, please see in the cash book there are no entries of VAT in payments of supplies or income from customers, as well as salaries and wages and medical aid, etc. And you'll see that. You always see that in the cash book. There's no VAT from those guys. Okay. So got to remember that. That's important. That's just so if you didn't know what that was all about. All right, so the journals. Now we're going to do the journals of the missed posts. Okay, this is I've gone through what journals, how journals work in previous lessons, so I'm not going to read through all this here for you. But basically, we're going to correct the missed posts. So the correcting the adjustments in the journal control account journals. Journal entries. The petrol cash book. The correction of the missed post for petrol is $40 on the debit side. Petrol, $17 on the credit side, and VAT of that petrol, $3. The correction of the missed post for the cell phone for Vodacom, $40 on the credit side, and then the cell is $17 and the VAT of $3. Depreciation. The depreciation. This is from the assets. The depreciation of assets journals must debit the running expenses and the income control account. So this is $1.30. That's the depreciation, and the depreciation must be put in the trial balance on the credit side. $1.38. So you add these two up, and they must always balance. They must be equal in size. Both must equal $61.30. Journals must always balance on both sides when tallying up. Okay, remember that. And you see it's balanced over here. Okay, we're running expenses, cost section of the business. All right, so casual wages, $20. Okay, that's $20 on the debit side. Wages less UIF. Okay, $150 minus the $1.50. We put the $150 over there. But if you add up this, the 20 and the 50, you get $170 less the UIF contribution. It works out at $168.50. But in the running expenses, we put it down as 150 over there, and then we show the UIF on this side, on the credit side. All right. Net casual wages and permanent wages less UIF. All right. Month of April, the running expenses costs. Okay, rent excluding VAT, $85. Cell phone excluding VAT. Stationery excluding VAT. There are the totals. Water and lights excluding VAT. Petrol at $40. Staff refreshments and cleaning excluding VAT. Watch my mouse. Salary. Now this we did this in March. Okay, for the running expenses as well. And I did a whole lesson in lesson 4 teaching you how we work this all out. So go and have a look at those. I'm not going to work it out again here. It's the exact same way we worked it out there. So go watch that lesson. Anyway, that's $300, and that's on the debit side. And we put on the credit side the $18, the PAY and the UAF is $18 of that. Okay, the contribution, the pay as you earn. Sorry, I can never pronounce that. And of course, the UIF contribution all adds up to $14. Medical aid $10, bank charges $4.25. That's excluding VAT. And we now add up the debit side, comes to $713.80. We add up all the UIF portions here on the credit side, comes to $19.50. Okay, so the business running costs less VAT in the cash book is $713.80 minus the $19.50. That gives us a total of $694.30. Just a little note here, NBC journal entries for petrol and Vodacom cell mispost in the cash book. We just did that now. Okay, we did that earlier. And see the journal for depreciation is also entered in the running costs. Please note that VAT is not including the running cost section. Salaries and wages is 1% and UIF contribution 1%. So the company contributes 1% and the salary and wages contribute 1%. So it's total 2% sent to the receiver of revenue. So the journal. Do you remember that we did the journal here for the missed post? It's just a reminder down there. Very, 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 very important. Okay, so let's bring all these balances forward and enter our trial balance. So these are all the balances brought forward from previous control accounts in March and April. So remember the March retained income brought forward, the capital account brought forward, that's the money we put into the business. The March and April assets of $78.26, March and April depreciation. And then all April's control, the sales accounts, the bank charges, the purchases account, cash book, inventory, customers control account. Okay, rent deposit, petty cash, suppliers control account, and then of course the VAT. So we're going to end off this month with the trial balance. Okay, let's go for it. Mel's Wholesale Bicycle Store for the month of April. Okay, so the sales control account. Remember up here, sales account of $2,105. We're bringing that forward down to the credit side, sales control account, as you notice. The first section of, I just want to repeat this. I just want to remind you that the first section of the trial balance, financial income and running expenses accounts. That's the first section. Okay, so the customers control account 2105, the interest paid on that, the interest the interest earned. Okay, on the debit side, wages and casual wages $168.50, the purchases of $1055, the rent, the print and stationery, the petrol, the cell phone, Vodacom, the depreciation of 130, the electricity and water salaries, pay as you earn and UIF, the medical aid, the bank charges, refreshments and cleaning, and retained income brought forward for the month of March, which is $658.93. That was brought forward for March. Now, just remember, we're just doing a repeat of what we did in March. So there's not you should be now familiar with that because it's just a repeat. It's just with a new month of April. So like we did in March, we're now doing the month of April. So the profit and loss retained income is this amount. We add up everything over here, and we get to that final amount down here. That's the total. Now, because these sides must balance, in order to find, because this side, as you notice, is $1,749.30. It's less than the credit side. So we take the credit side balance of that, we minus this amount that we've now added up, this $1,749.30, and we get a total of $1,039.63. And we put that on the debit side, and this is a profit. If this was on the credit side, it would be a loss to the owner, for the business. But so very important to remember, if this side is smaller than that side, then this amount will be on that side and it will be a loss. And these two have to balance. So that's how we find this amount in order for this to balance. So he made a profit. Okay. Okay, so this now is the second section of the balance sheet of the trial balance continued. It's the second section of the balance sheet, okay, of that trial balance. So remember now, this profit and loss retained income, we bring that into the second section of the balance sheet of the trial balance continued. It comes in as retained income and it's brought down, okay, of $1,039.63. All right. So long-term liabilities, capital account $15,000. Remember, we originally put that into the business. Assets of $78.26 on the debit side. That capital account's on the credit side. The depreciation of $2.60 on the credit side. The current assets, Absa Bank, $15,444.25 on the debit side. The inventory control account, the customer control account, the rent deposit, okay? Current liabilities, petty cash, $40.50. Suppliers control account of $402.50. And then the VAT, $192.28. Remember all that income we were bringing forward, all those amounts we're bringing forward from March and all those April, these are all bringing forward into these trial balances. Okay, so this is the trial balance in balance. What that means by that is the trial balance must always balance. So when you add up all the debits amounts and then you add up all the credit amounts, these two figures must be equal. If they're not, there's a problem. Okay, you need to go find them, and then I'm going to wish you good luck for that. Because some people spend years trying to find those figures. So just that's why I said to you, accountancy is very intricate. It's so procedural. Everything leads to everything, and figures, little cents. If this was zeros, if this was no cents, if this was just an amount and this one had a cent, you have to go find that cent. Yeah, that's accountancy. And we've tried to help you here just to understand that. So very important. The trial balance must always balance. Either you've put something wrong somewhere, if you entered in a wrong thing, or you just haven't been following our lessons. That's probably why. All right, yay. There we go. We finished the trial balance. We finished the books for the month of April. Now, of course, as you do, like we did for the month of April, when we went from March to April, you now rinse and repeat. Okay, April is going in through to May. Okay, and May's we're going to do the same thing we did with March, and we did in April when we brought March. We're going to take April's figures into May, and then we're going to do the same thing we've just done here. All right. So that's it, rinse and repeat, and you do that the whole year round. Okay. So we ended the lessons. We ended the course. The course is over. I hope you learned something. I hope you loved it as much as we loved giving it to you. And I hope that you learned something from this. Please remember, accountancy is very intricate, it's very involved. So there's no ways you can go back to certain lessons and think that you can follow on from there. You have to follow this in sequence. I would suggest if you just came to this video, go to lesson number 1, the introduction, and work your way through that until you know what how you until you understand. Sorry, the introduction. Move on to lesson 2, lesson 3, lesson 4, lesson 5, and right up to 8. But you have the basic grounding to do your small businesses books. You have everything you need to know. There's nothing else to teach you in here. All right. Thanks for watching. Please like this video, share it with everybody you know, and subscribe to our channel. And ask questions, leave comments. This is the only way we're going to know. Feedback. Give us some feedback. How we can fix things or make things more easier for you to understand, so that we can help you with this and help you with these lessons and with doing books. All right. So that's Sean from Mel's YouTube book site YouTube channel. Good day on you.